Every day, thousands of people pour their hard-earned capital into the latest, surefire asset class. They analyze charts, they study market trends, and they listen to experts, all in the hope of finding the perfect vehicle for their wealth. But there is a silent, mathematical certainty that most of them are ignoring. If you put a Formula One engine into a car made of cardboard, the car won't win the race. It will disintegrate at the first turn. Your money is the fuel, and the market is the track, but you are the vehicle. And before you invest a single dollar into an external asset, you must first build the internal cognitive infrastructure capable of holding that wealth. Most people lose money not because the market failed them, but because their own nervous system did. They haven't invested in their psychological liquidity, the ability to remain rational when the numbers on the screen turn red. They are trying to build a skyscraper on a foundation of sand, and then they wonder why the first sign of a recession brings their entire financial life crashing down. The truth is, wealth isn't just about what you own. It's about your capacity to be wrong without self-destructing. It's about a specific mental filter that separates the gambler from the investor. Without this one missing piece, even the best investment in the world will eventually become a liability in your hands. In this video, we are stripping away the talk of dividends and interest rates to explore the identity shift that must happen before you ever touch a brokerage account. We are going to deconstruct the neuroscience of loss aversion and show you how to build a mental shock absorber that ensures your emotions never dictate your equity. By the end of this video, you will understand the exact psychological mechanism you need to install to stop reacting to the market and start mastering it. This is the difference between those who get lucky for a season and those who build a fortress of wealth that lasts a lifetime. If you value deep dives into the human mind and the true mechanics of wealth, subscribe and join us. Let's talk about the investment you've been overlooking. We live in the information era, which has given us a very specific and dangerous delusion. We confuse knowing with being. You can spend hundreds of hours watching YouTube tutorials on market cycles, reading the annual reports of Fortune 500 companies, and memorizing the history of the S&P 500. You might feel prepared. You might feel like an expert. But there is a massive silent gap between understanding a strategy and having the emotional skeletal structure to carry it out. Most people enter the world of investing as financial tourists. They like the idea of the destination, the passive income, the early retirement, the security, but they have no idea what the weather is actually like on the ground. They build what I call a paper tiger portfolio. On a spreadsheet in a bull market, it looks fierce, it looks indestructible, but the moment the wind changes, it shreds. Here is the microshock. Your financial success is not determined by your ability to pick winners. It is determined by your nervous system threshold. Think about it. We've all seen the person who buys into a great company, watches it dip by 10%, panics, sells at the bottom, and then watches from the sidelines as it rockets to new highs a month later. They had the right information. They had the right asset. What they didn't have was the internal shock absorber to handle the volatility. They were trying to manage a $1 million outcome with a $1,000 mindset. We treat investing like it's a math problem, a game of logic and spreadsheets. But when your life savings are on the line, logic is the first thing to leave the room. Suddenly, you aren't an investor. You're a biological organism in a state of fight or flight. And unless you've upgraded your internal operating system to handle that stress, you will make the wrong move every single time. The struggle you feel isn't because you haven't found the right coin or the right stock. It's because you were trying to play a high-stakes game with an uncalibrated instrument, your own mind. You're worried about the ROI of the market, but you haven't considered the ROI of your own emotional stability. To survive the world of capital, you have to install a mechanism called emotional liquidity. In finance, liquidity refers to how quickly an asset can be turned into cash. But in psychology, emotional liquidity is how quickly you can return to a state of rational calm after a shock. Most people have high financial aspirations, but zero emotional liquidity. When the market drops, their rational mind is frozen, and their survival mind takes the wheel. Here's the first core mechanism, the volatility quotient, or VQ. While most people focus on IQ or even EQ, the wealthy focus on VQ. This is your ability to decouple the price of an asset from your sense of safety. The average person sees a 20% drop in their portfolio as a 20% drop in their personal worth. They feel it in their gut. It feels like a physical threat. But a high VQ individual understands a fundamental biological truth. The market is designed to trigger your amygdala. It is a machine built to harvest the money of the fearful and hand it to the bored. Here's the microshock. Investing is 10% math and 90% the ability to endure boredom. We've been sold the lie that investing is fast-paced, high adrenaline, and active. But real wealth is built in the dead zones, those long stretches where nothing seems to happen, or worse, when everything is moving backward. Most people fail because they are stimulus addicts. They need the dopamine hit of a win or the adrenaline of a trade. If they don't feel active, they feel like they're losing. If you're finding value in this shift of perspective, subscribe and join our community. We focus on the psychology that the charts ignore. The second mechanism you need is anti-fragile positioning. Most people invest in a way that requires them to be right about the future. They bet on a specific outcome. But the wealthy invest in a way that allows them to be wrong and still profit. They don't look for the best investment, they look for the most resilient structure. They recognize that their own brain is a biased, flawed instrument, so they build systems that protect them from their own impulses. They don't trust their willpower, they trust their infrastructure. They automate the boring parts so their survival mind never even gets a chance to see the red buttons. They understand that the greatest enemy of $1 million portfolio isn't a market crash, it's the sell button in the hands of a panicked human being.
Here is the most uncomfortable realization you will ever have about your relationship with money. Most people don't actually want to be wealthy. They want to be right. They want to feel like they've figured it out. We have a deep-seated complexity bias. We believe that if a solution is simple, it can't be powerful. If I told you that the secret to generational wealth was simply staying calm and doing nothing for 30 years, your ego would feel insulted. It would feel too easy. So instead, we go looking for the high-frequency trades, the complicated tax shelters, and the insider tips. We want the drama. We want the theater of investing because it makes us feel like we're in control. Here is the microshock. The market does not reward your passion, it rewards your indifference. The person who cares the most is often the person who loses the most. Why? Because when you care too much, you become reactive. You become attached to your thesis. When the market proves you wrong, you don't see it as a data point, you see it as a personal attack on your intelligence. You stay in a losing position just to prove that you weren't stupid. This is what psychologists call identity protective cognition. We tie our sense of self to our investments. If you're a crypto guy or a gold bug, you aren't just holding an asset, you're wearing a uniform. And when that asset drops, your brain treats it like a threat to your social identity. You become a soldier in a war that the market doesn't even know it's fighting. The wealthy have made a fundamental flip in their perspective. They have realized that investing is not a sport, it's a utility. It is a boring, mechanical process of moving capital from high-risk emotional states to low-risk rational structures. The reason you haven't succeeded yet isn't because you lack the secret information. It's because you are still addicted to the high of the struggle. You are still trying to be the hero of your financial story. But in the world of wealth, the hero is usually the person who is so bored by their portfolio that they forget to check it for 6 months. Once you stop trying to be smart, you finally give yourself permission to be rich. You realize that the most sophisticated thing you can do with your money is often the simplest thing, the thing your ego hates doing because it doesn't get to take any of the credit.
So before you transfer that first $1,000 into a brokerage account, ask yourself a question that has nothing to do with percentages, dividends, or market cap. Are you building a portfolio that feeds your ego or a structure that protects your peace? Most people are so desperate to get ahead that they never realize they are actually buying a second job, one that pays in anxiety, cortisol, and sleepless nights. They think they are becoming owners of the market, but they're actually becoming slaves to the flickering green and red lights on a 5-inch screen. If your net worth goes up, but your quality of life goes down because you're constantly checking the ticker, you haven't made an investment. You've made a bad trade. You've traded your time and your sanity for a number that you're too stressed to actually enjoy. True wealth is the ability to be completely indifferent to the chaos of the world. It's the silence that comes when you realize your foundation is so deep that a 50% market crash is just a footnote in your biography. It's the cognitive infrastructure that allows you to walk away from the screen and actually live your life. But that silence has a price. The price is the death of your need to be special, the death of your need to be the smartest person in the room. The market is a machine that is perfectly happy to take your money if you insist on bringing your ego to the table. The dollar you are about to invest isn't the starting line. Your internal architecture is. If that architecture is weak, the money will find its way to someone whose mind is stronger. The market is ready for you. The question is, are you ready for the market? Or are you just another financial tourist about to find out the hard way that the weather is a lot colder than it looked on the brochure?